Let's drive home fast as possible. Let's begin from Dangote Sugar and look at the revenue for 2022. And when you compare that to 2022, you're having about 83.15% change there, from 50.21 billion in 2021 to 91.96 billion. And if you look at the dividend per share, about 1 naira 50 kobo in 2022, a jump from 1 naira in 2021. So look at the earnings per share there. Profit margin as well went up from 43.94% in 2021 to 59.52% in 2022. Ambrose.
Yeah, look at this number. I'll tell you, this is an impressive number, and it beat market expectation. If you look at the top line, with almost getting to 100% up, that is good one. It beat all standard, both everywhere. That both the profit margin, the earning per share, the profit after tax, the revenue, even the payout. It shows that this company, and that is one thing that investors should have in mind. Not only looking at this data the last for the full year, you want to look at how this company performed in the first quarter, second quarter, third quarter, and fourth quarter of 2022. It's going to be a continuation in this current year, because when you see a company that earnings is expanding, volume in that stock is expanding, and price is going up, it tells you something that is happening in that company. It's not only just seeing the number and waiting for the dividend. Dividend is just to reward investor. You want to see how consistent this earning will go, and what are the factors driving this company. You can look at the profit margin. Shows that this company is really effective or efficient in managing costs. For a company to have about a 59 point something profit margin, it tells you that in every 1 naira of their gross earnings, they retain about 60 kobo as profit. For me, is a good. That means investor in this company know that the reserve or the retained earnings of this company should be robust to carry them into the future. And if they are also posting consistency number between now and the end of this current financial year, so that the price is just started. The pullback we saw today is just on profit taking. This number is strong to support this price to as high as 25 naira, but it got there today around 21 before pulling back. But I tell you, towards the markdown, this price will still go up for this stock. This is a good number for me. Your profit margin is up by 59.52. This is almost 60 kobo. Out of 1 naira. For me, it's a good one for Dangote Sugar.
Fundamentally, so
very strong.
We can say it's strong.
And also a payout of almost 50% growth from 1 naira to 1 naira 50. That is 50% growth in your payout. That is a good one too. Yeah.
Okay, good one for investors in the Dangote Sugar company there. But let's move to the next one and look at Nascon financial year report. Full year report shows that the company moved from 40 kobo in terms of dividend per share to 1 naira in 2022. If you look at the profit margin, from 8 naira 92 kobo in 2021 to 9 naira 38 kobo. And if you look at the profit after tax, there's a percentage change there, going up as high as 82.2% from 2.97 billion naira in 2021 to 5.47 billion. So how they describe this earning? Impressive, right?
Yeah, this is also a good number, but actually investors should look at. If you look at the numbers from the two companies, despite they are all sister company, Dangote Group, or if I say, I'll tell you that this number for Nascon is good, but you can see the difference between Dangote Sugar and Nascon. Look at the profit margin. That is not naira. That is profit margin of 8.92% and 9.38%. It's not naira. That is that as I speak now, they need also to improve in their cost management. You can see, I know that yes, cost of doing business, cost of sales, cost of transportation, everything has increased. That also have eaten into this company profit margin. But I believe that on this note, it's a company doing about almost 58.79 billion in a year, but your profit after is just 5.47. That's why you can see a low profit margin of 9.38. But it's a good one because it's a movement on the up direction from 8.92 to that. But they need to also do more in terms of cost management. But one thing is that you can see that this company also has grow their dividend from 40 kobo to 1 naira, and this is what investors are. Like I said, this market now is for what? For investors. Want to look at where will I have good dividend yield, and this payout to support your dividend yield. For me, it's also a good number in terms of dividend. But moving from 40 kobo dividend to that's almost like 60 kobo growth in your in your dividend. For me, it's also good. Also, the number is okay, but we need them to work more on their cost. It's not their fault. I know that this season.
And if you look at also the fact that the season has been greeted with a lot of economic, policies and all of the initiatives that have been introduced.
The global headwinds.
So the global headwinds is also affected.
Yeah.
Now, I think we can do this in 3 minutes before we go. And it's very, very important. NGS Group, of course, I think we should look at the numbers. This is, of course, the house, or will I say, the platform that hosts all other, companies making money this money now. So if you look at the revenue, since it became demutualized, look at the revenue from 5.78 billion naira in 2021 to 6.17 billion. It looks perhaps impressive. And if you look at the earnings per share, however, there's a bit of decline from 1 naira 13 kobo to 35 kobo in 2022. I don't know if these numbers are impressive though. But of course, look at the profit after tax, from 2.25 billion naira in 2021 to 690.48 million. What happened? What happened?
Yeah, like I will tell you that every investor should know why you are in any investment. Your investment should always guide you. No, it's not just the name this time. We don't invest because of the name or the age of the company. You are there to make money. That's why I said any company you are entered, where you are not making money, you are about to sell off, about to where there's opportunity. For NGS, even in 2021, they were not declared because we just say okay, they were newly, neutralized. Let's also that's like the performance.
So perhaps that is why you're seeing the impact in 2022.
Yeah, performance also you can see that it's deteriorating. It's just declining. If their top line just flat.
I know they have it's a group of companies.
I know.
Property
I know.
Okay, so
well, no, but at the end of the day, it's not your product line or your service line or your conglomerate of companies that matters. At the end of the day, what is the numbers coming out from? That is the most important thing. For NGS, investors that enter this stock at 30 naira or 20.
In 30 seconds, can you wrap up?
For me, NGS, investors should look away from that stock. That's the simple way I'll say. Because N is declining, and why will I put my money where I'm not sure of making anything from there? Every investment for me to put food in my mouth. If for this company, they're not going to pay me, they're going to pay me dividend, because if your earnings are dropped from 1 at 13 kobo to 35 kobo, how much you're going to pay? And on that note, you can see that their bottom line have declined from 1 point something billion to 600. It tells that something is from somewhere. Well, let's have to be very careful.
Okay, NGX, if you want to attract investors,
you need to do well.
You need time to do well. I think let's leave it there.
Yes.
Good place to leave it. Thank you so much, Ambrose Omodio, Chief Research Officer, Investment Consulting Limited.
Thanks for having me.
Thank you for coming.